Fancy a share of the booming Florida property market without the hassle of owning property and paying US taxes? Look at what Uncle Graham has gone and found. Hello, I'm Graham Rowan, the renegade investor cutting through the crap to tell you what's really going on in the world of wealth creation and wealth protection. In this episode, I want to let you look over my shoulder at a new investment that I'm about to make. Property prices are an emotive subject with British investors. So my opinion that most British property is overpriced often ruffles a few feathers. But it's not the case everywhere. Some countries saw a massive fall in house prices after the 2008 crisis. Ireland is one example, with 60% falls being typical. Spain is another. But the one I want to talk to you about today is America. America as a whole saw similarly daunting falls in property values, down by more than half between 2008 and 2011. It was a real wake-up call to the millions who believe that property is a one-way bet that will only ever gain in value. But all assets go through cycles when they're fair value, then they become expensive as more people climb on the bandwagon, then some sort of external event triggers a crash, so they go below their real value and become cheap. It's never easy to time or predict these value changes, but usually the big money is made by getting in when everyone still thinks you're crazy to do so. That's why I'm now having a close look at gold mining companies, because they were unfashionable at the start of the year, and they're down another 50% since then. There just can't be many people left to sell. American property felt like that until early last year, when prices started to turn northwards again. With somewhat better news about the economy and jobs, as well as banks dipping a toe back into the mortgage market, the beginnings of a recovery were being seen. But what are the three critical factors in any property investment? Altogether now: location, location, location. There are parts of America I still wouldn't touch with a proverbial barge pole. Many of you have looked at Detroit, where you can practically buy houses on your credit card. They quote great yields, but only for the first 2 years, and then you're on your own. And believe me, if you want to pop over to Michigan to extract the rent from some of these tenants, you'd better take an AK-47 with you. The other challenge is that if you own property, you have to become a US taxpayer and submit a tax return each year. It's a lot of hassle and quite some risk beyond year 2. I'd rather invest in a more sought-after area where prices are more likely to recover strongly on the back of real demand, which is why I'm looking at Florida. Even the nicest parts of the Sunshine State were ravaged by the recession, leaving banks holding lots of foreclosures that they're desperate to remove from their balance sheets. But what I've unearthed is a way to invest in prime Florida property and exploit the rising market without the hassle of becoming an owner, a landlord, or an American taxpayer. What I've found is a bond paying fixed returns over a 5 or 7 year period, where the bond is secured against the underlying portfolio of properties. Properties are bought cheaply from the banks, refurbished, and then either sold on for a profit or rented out for income. In this rising market, it's likely that the majority of properties will be sold on to maximize returns. The minimum investment is $15,000 and the maximum is $1 million. You'll receive a bond certificate from trustees with 200 years experience of looking after these kind of investments. You'll have a lien over not just the shares of the property development company, but also its underlying assets. The 5-year bonds pay 9% for investments below $70,000 and 10% above that level. The 7-year bond pays on average 10.85% for bonds up to 70,000 and 12% above 70k. This is a dollar-denominated fund, so this is one of the reasons I'm attracted to it. Most commentators see the dollar as the least worst of the international currencies at the moment. So assuming you already have quite a bit of exposure to sterling, then a proportion in dollars will be good for spreading currency risk. There's lots more to tell you over at floridapropertybond.co.uk, but there's one thing I do have to tell you. This is one of those investments that's designed for sophisticated investors and high net worth individuals, so it's not for everyone. If you believe that Florida property is likely to continue recovering value over the next 5 to 7 years, and you'd like more exposure to the US dollar while receiving 5 times the return on the best bank account, this might just be for you. And remember, be careful out there. Thanks for watching. If you've enjoyed what you've seen and you want to see more, why not click here to subscribe? And if you're one of those saddos that spends your life playing with all that social stuff, why not like us on Facebook or follow us on Twitter? See you next time.